Hello guys, I have another question. Which is better? Stocks, investing in stocks, in precious metals like gold and silver, or bonds? Now, according to the chart, it means according to the price movement, you can find it in any books or you can find it online. Stocks are the best. And then we have bonds and gold and silver. This is history. Okay, if you go to the chart, and you can see the development, like for 50 years or 60 years, you see the development of stocks and precious metal like gold and like silver and bonds. Okay, now the reason for that is that a stock, it is a company that it is living. Now what does it mean? It means, I will give you just an example. Facebook begins with $1,800. This is the initial investment made by Mark Zuckerberg and his friends all together. Okay, they don't have that much money. And how? And you say to yourself, how this $1,800 few years ago can make someone 40 or 50 billion dollars today in just few years? It's impossible. But in real life it is possible, because a company is small, but when the people get interested in this company, they buy shares. Shares is just virtual. That's why private companies go to be public. Now, why do they go public? Okay, what do you think why? They go public because they want money. They have a successful idea. The successful idea works. They begin to see the money, but they need more money. That's why they go to the stock market and they get listed. When they get listed, they have virtual shares. Virtual, what does it mean? It means when they sell for example, the first days, especially the first day of the stock market, of this IPO, which is initial public offering. It means a private company, through a process, it gets listed, and the first day it offers 100 million or 500 million virtual shares. It's just virtual. They say, okay, our company is 500 million shares. Okay, you buy whatever you like. Now all this money goes to the company. So this company, it was very small. Now it was very small, but with this money it becomes bigger and bigger and bigger. And if you can see, try to think about these companies like Costco, like Walmart, like JCPenney, like any other companies, Google, Amazon, Yahoo, all these companies. Why do they become so big? It's just because the people, they like them, they buy them, that's why they become bigger. Now, going back to our example, just to give you an example, okay? 4 years or 5 years, Facebook was the down, it was $17.55. This is Facebook. Okay? Now, how much it is? Okay? So it has, like, in this 4 or 5 years, it has like 500%. Okay? Now, going back to gold, 4 years ago, it has lost about 55, I think 55%. It was 1800 and then it goes to 1100 or 1200. So in these 4 or 5 years, it lost a lot of money because gold cannot grow like a company. That's why Warren Buffett, who is one of the biggest investors in the world, he says, I will not invest in gold and silver. Now why? Why he chooses to do that? Because he says gold and silver by themselves, if you buy 1 ounce of gold, which is now, I think it's nearly 1250 or something like that. Let's say $1,300. If you buy 1 ounce, this 1 ounce can in the future it become 10 ounces, for example. You say to me, no, it's something physical. You have 1 ounce, it is 1 ounce. I think it's like 1 ounce is like 28 grams or something like that. Okay? So 28 grams of gold, it doesn't grow to 100 grams of gold. It doesn't. So when you buy something like gold or silver, the price changes a little bit, but the gold itself, it doesn't. Now, I give you an example of stocks. Apple was 100, it goes to 700 in few years. So 700%. Now, then what they do is that they split. Okay? If you have 1 share of $700, it becomes 7 shares. So you see how things can develop into a company. Walmart, for example, it starts with 1 store. Now it has around 12,000 stores all over the world. Costco also, McDonald's also. You see how things develop in a company. That's why all the people of the world, they invest in stocks. And all the people who made a lot of money, they made it through stocks. Not just Warren Buffett, but almost all the people investors. Gold and silver, you get stuck with this. Bonds also, because bonds, although they give you 6% or 7% or 5%, but the problem is that the principal changes to up or down, and that's why you lose money. That's why the development of bonds, it's not the same as stocks or gold and silver. That's why in general, for me, if I want to invest, I will invest in the stocks. I will never buy. I will buy gold and silver and the other stuff from the stock market in terms of trading. I trade, yes. Okay, you buy a company here, $10, it goes to $20, I make money. The company itself. Okay? So, it's not, as I told you before, it's not the stocks, it can grow because the companies grow. Regardless of the shares, the company itself grows. The bonds itself, or silver and gold and precious metals, they don't grow by themselves. It means, as I told you, you have 1 ounce of gold, it means 1 ounce of gold. The prices fluctuate. Yes, it can go up, you can make money, some money, you can go down, you can lose some money, but it is not the same as stocks. Those who want to see the chart, they can get a full idea how the stocks go up better than any other investment in this world. That's why America here is the biggest stock market in the world. It's just because some people, they make money from it. If all the people lose, the stock market will collapse, and all the people take their money, and these companies will collapse. Okay? The stock market will collapse if people, they don't make money. But there are some people, they make money, and there are other people, they don't make money. The difference is that some people, they know what they are doing, other people, they don't know what they are doing. And this is the basic difference about people in the stock market. Okay, so thank you very much for watching this video. If you have any insights or you have other experiences about what I say, please share with us. If you have a private message, send me an email. Thank you very much.